who's going to be Isaac Andresky, who's going to be presenting today. And then we have one of our affiliate members, Ryan Berridge, who's going to provide about 2 minutes about his company. So I'm going to start with Isaac's bio. Isaac, over the last 4 years, Isaac has worked at Formations, and he's worked closely with thousands of self-employed real estate agents to help them achieve financial clarity and success. With extensive experience educating on tax strategies, he brings a wealth of knowledge and a hands-on approach to guiding agents through the complexities of managing their finances as independent professionals. His dedication to empowering others, combined with his expertise, has made him a trusted resource for agents looking to build a stronger financial foundation for their future. If you do have a question for Isaac, please put it into the chat. Again, at the bottom of your screen, there should be a chat bar, and questions will be answered toward the end of the program. And then we have Ryan Berridge. Ryan's our affiliate member. Ryan's the president and lead photographer of Berridge Media, an award-winning real estate media company specializing in photography, videography, drone services, floor plans, and iGuide virtual tours. He has over 25 years of experience, and he's worked alongside realtors to create high-quality visual content that helps showcase properties effectively and attract buyers in today's digital-first market, while also staying compliant with MLS guidelines and state regulations. So I've asked Ryan to put his information, after he's done speaking, put his information into the chat. And again, we thank you, Ryan, for being one of our affiliate members. Once Ryan's done, Isaac, it's just gonna go right over to you, okay? All right. Thanks, everyone.
Thanks, Lisa. Thanks for having me. Good morning, good afternoon, everyone. Again, I'm Ryan Berridge, President and Lead Photographer of Berridge Media, and I'm excited to be here as a sponsor of today's Education Power Hour. While we're all remote today, one thing that remains the same, the power of great visuals in real estate. In a market where buyers are scrolling fast and sellers are looking for the best agent to represent them, first impressions matter. That's where we come in. At Berridge Media, we specialize in high impact real estate marketing that not only helps you sell homes faster, but also helps you win more listings by showcasing the high level of marketing you bring to the table. Our services include professional real estate photography, where buyers decide in seconds whether they're interested, and make sure your listings stand out. Drone photo and video, showing all the properties from every angle. Virtual tours and floor plans, which are perfect for remote buyers or those with busy schedules. Headshots, because we all know how we like to update them. And social media branding content, because your next client's watching and your online presence should work for you 24/7. Our work has helped homes sell in under 9 days and over asking price. And one of our realtor clients won a $1.4 million listing simply by showing a seller the quality of media we're producing. Your marketing is your first impression, so you should make it count. As a fellow B Corp member, I know how competitive the business is, and I want to help you stand out, attract sellers, and close deals faster. Let's connect. Visit Berridge.media, follow us on social, or drop us a message in the chat, and I'll happily follow up. And I will also drop my contact information in there as well. Thank you for your time, and enjoy today's session.
Awesome. Thanks, Ryan. Thanks, Lisa. Thanks, everybody. I'll go ahead and share my screen. Let's see. Okay, so today we're talking taxes, and I know taxes are everybody's favorite subject, but yeah, I think it's a good time of year to spend a good hour. We'll see. I like to go, 30 minutes, 45. Leave some time for questions, which, by the way, throw some questions in the chat. There will be some QR code options to scan and book a free consultation as well. But yeah, I'm again Isaac. I'm from Formations. If you're not familiar with us, we're kind of a one-stop shop, all-in-one tax and back office management solution. And today we'll review just some considerations before filing 2024. I've talked to a lot of people who have already filed 2024 taxes, which good for you all. You're so on it. But if you're like most, and embarrassingly myself included, you haven't yet filed taxes. So just considering things to optimize your tax position for last year. Being self-employed, of course, means, you don't have the same infrastructure and perks of the W-2 world, right? You don't have an HR department that's auto-enrolling you in 401k and matching everything and giving you health insurance and HSA, FSA, all that stuff. You also don't have a billing team, so the bookkeeping and just keeping track of all that stuff is up to you. So we know, I've like Lisa said, I've talked to thousands of people. That sounds weird to say, but it's true. I've been doing this for about 5 years, and if there's one thing that I know is true, is that being self-employed has a ton of perks. Higher earning potential, autonomy, making your own hours. But if there's one thing that tends to be a universal ask or desire among the real estate professionals that I've worked with, it's just something holistic and cohesive to manage the back office, because things get scattered, taxes are filed late. It's just a waste of time to do your own books and keep up with stuff, because your goal is to focus on what you do best, selling real estate. So anyways, formations were based in Kirkland, Washington, a little ways away, but we've developed the first kind of all-in-one back office, S Corp focused tax management system for real estate professionals in particular. So we do everything from accounting to tax filing with that S Corp specialty, which we'll talk about during this presentation. I have a calculator. We can play with some numbers if you want to throw out some questions or examples, like what can an S Corp save me with 50K net or 150K net? We can kind of show some real life ROI examples. Yeah, if you're interested in exploring what we do a bit further, there's a QR code here. Feel free to schedule a free tax analysis. I'll also throw, while I'm talking about it, I'll toss my meeting link in the chat for those that are on their phones. I realize this early on. The QR codes, usually aren't the most useful thing if you're on one device and that's your main device used to scan as well as hop on Zoom. But there's my meeting link in the chat if you'd like to schedule a follow-up. So when it comes to taxes, it's important to remember that taxes are, in a way, kind of an expense. Obviously, they're not actually an expense. You can't unsubscribe to the IRS as much as we'd love that. It's not a expense in the same way that advertising or any sort of subscription fees are. But with the right lens, the right frame of mind, analyzing taxes as a manageable expense is in a lot of ways the key to achieving the goal of truly optimizing your tax position. So thinking about taxes as your largest household expense, that's where we can get a bit more granular, a bit more strategic, and just focus on, if you're familiar with that Profit First book, just focusing on your net profitability, your take-home money, and then the same way you categorize the other expenses and just hone in or just shave off what's unnecessary, lump in taxes to that as well. I know in that book he has that kind of separate bank account for taxes, but we like to think of taxes as the same as your subscription fees for marketing or whatever. So that's just kind of the perspective. We don't want tax season to ever be a thing. A lot of our webinar subjects are cancel tax season. So we think that good year-round proactive management of taxes is the best way to align yourselves in the healthiest position, and not just that, but save many thousands of dollars in taxes. But first, let's just go through the tax season stuff. A lot of folks are still dreading that one weekend they'll have to carve out sometime in the future for filing taxes. But before filing taxes, here are some thoughts, some strategies to consider, some kind of often overlooked things. The first thing is, if you have an S Corp, if you have a C Corp, if you have some business where maybe a 1065 is due March 15th, we're coming up on that deadline. And if filing an extension makes sense, we never want to advocate for pushing things out into the future if you need not push it out. Best to just tackle the project and start fresh, not carry any, not have any friction as you carry on to the year. But filing an extension is very easy. We can assist with filing an extension. no charge. We'll file it for our Asian partners for business and personal returns. That gives you a bit of a buffer. If you have some strategic planning, like maybe some retirement contributions or some really strategic expense management that hasn't yet been realized, maybe filing an extension to give you an extra month or two or 6 all the way to September, October could be a good starting point. So if you just Google search like extension form IRS e-filing, there's an easy way to file that 4868, I believe is the form, to extend your personal taxes to give you a little bit of breathing room. As far as maximizing expenses, there are a lot of examples, and I'd love to go ahead and throw it in the chat if this interests you or if you have an idea top of mind of your most valuable expense. Like what's an expense that maybe working with your CPA, you didn't realize you could write this off as a real estate professional, and then after a few consultations, you had that conversation. You're like, oh wait, I can expense this. Like I should have known the whole time. Because the examples we provide here for business use of home is a very obvious expense. If we're working any sort of remote, obviously, once COVID hit, this became very, very relevant. But this is something that changes. It fluctuates year by year. But in general, if you're working from your home office, you can deduct $5 per square feet up to 300 square feet. So just to pull up our handy dandy calculator, we'll start on this journey here. So if we're making a net income of $120,000, this calculator, just to explain, will help us calculate tax savings for federal and self-employment, aka the FICA tax. So if you're working from a 100 square foot office and you can deduct $5 per square feet, that's $500 you can write off as a home office expense. And you'll see that adjusts your federal tax from $21,707 to $21,597. So you save $100. For me, that's $100. I don't know. That's Chipotle last night. That's 5 Chipotle burritos plus a side of chips. That's worth it to me, just to consider the home office I work in and have it on my tax return to deduct. That's just a random example of an expense that you can consider and include on your taxes. Mileage is another big one. Oh, actually, I see in the chat we have an example. Gas, LOL. Okay, perfect. So we're talking about mileage or the vehicle expense. That's a big conversation that we have with our clients. Like you can do one or the other, standard mileage or the vehicle expense. For the standard mileage, it's 67 cents per mile. So if you drive 10,000 miles, for example, then you can deduct $6,700. So that'll save you almost $1,500. So, you're just to explain where we're getting these numbers from. The federal tax is a progressive tax, meaning that percentages progressively get higher and higher the more you earn. So if you're married filing joint for 2025, the first dollar you earn up to $23,850 is locked in at this 10% bracket, locked in, and then $1 over $23,850 from $23,851 up to $96,950, that stretch is then locked in at 12. So on and so forth. So if you're making 120K, married filing joint, you're at the 22% marginal tax rate. So when we write off our mileage, if we drove 10,000 miles, being able to deduct 67 cents on the mile, then we're saving 22 cents on the dollar to the tune of $6,700. That's $1,500 of tax savings. That's too much Chipotle in my case. But there's a great example of real estate professionals are always on the go. They're always using their vehicles for showings, for listing, like just going out. But there is a conversation. I love that example that somebody brought in. Callie, for gas, because if you have a certain type of vehicle, or if you have some maintenance, or if you're paying a lot for gas, which gas prices fluctuate, and the amount total that you pay out of pocket for your vehicle maintenance, the expenses, exceeds what you could write off. Like if it exceeds the $10,000 mile, aka $6,700 standard mileage deduction, then you should compile all your receipts, have good bookkeeping, and write off gas and everything else. If it means more of a deduction. So love that example. Love that. What else? Only takes premium. Yeah. Well, in that case, you definitely want to write off the vehicle expense instead of mileage. Well, those are two examples of just some last minute things that we find are very often missed. Mostly because the home office is one of those things that you kind of maybe forget about, myself included, and I work in my home office all day. But tracking mileage is like you have to have mile IQ or something. You have to like hit start every time you get in your car. It's just kind of a task on top of all the other tasks and bigger things that you're doing. So, um, if you have a question about mileage and bookkeeping tracking, we can give you a demo of how our system works. We do integrate with mileage tracking systems, so reach out if you're interested. Some other examples of last minute considerations for 2024 taxes are prior year retirement contributions. Of course, there are pre-tax and after-tax options for retirement. Pre-tax is like an IRA or a solo 401k or a defined benefits plan. And pre-tax just means you can subtract it on your tax bill. So for 2024, if you contributed to an IRA, the amount you contributed would deduct from your taxes back to the calculator. So if I put the maximum, $7,000 into a traditional IRA, there we go, $1,500 in tax savings. Because it's a pre-tax plan, I can write it off. The catch is obviously when I withdraw that income from my IRA, my pre-tax IRA, when I retire, I'll pay taxes on that, but that's over time as compounding interest grows and grows and grows, that 7K. Plus, hopefully when I retire, when I withdraw, I'll be at a smaller marginal tax rate meaning highest percentage I hit. Where right now, in that example, I'm at the 22% rate. Hopefully when I retire, when I'm withdrawing, I'm at the 10% or less, right? But there are other options like, we recommend 401k or a SEP if you have a bit more cash flow or if you're playing a bit of catch up in retirement contributions. And then an after-tax contribution, a Roth. You could put 7K into a Roth, which is you don't write it off under taxes, but you also don't pay taxes on it when you withdraw it when you're retired. And you can do both depending on income limitations. So yeah, putting money into retirement, there is still time to do that for 2024, depending on your circumstances and which plan you have. So make sure if you're investing into your retirement accounts to optimize that as best you can. Schedule C to Schedule E. This is just a jargony way of saying if you have an LLC, there's a hidden opportunity within that LLC to do something called an S-Corp tax election for last year. And we'll talk more about S-Corp later, but suffice it to say that you pay self-employment tax. S-Corp eliminates self-employment tax and allows you to pay a fair amount of FICA, which should result in $5,000 of tax savings or more. But we have a whole section devoted to that, so more to come. And then the EV credit. So a lot of people are driving electric vehicles. I think it's like a $7,500 tax credit. And that depends on certain criteria being met. But, and just to quickly explain credits versus deductions, credits are better than deductions. A deduction is what we're looking at here. Like I'm subtracting from my total to save X amount of cents on the dollar, 22 cents on the dollar. A credit is a dollar for dollar subtraction. So if I have if I have an electric vehicle, and I get a $7,500 tax credit, take the total tax bill I have, in this case, $20,167, and from this total, subtract 7K instead of deducting 7K, which would save me 22 cents on my $7,500 subtraction. So credits over deductions, just a quick note there. For those, now we're talking about S corporation. For those that have an LLC or an S corporation, LLC meaning you could have the opportunity to S-select still for 2024 if your taxes are open. But the deadline for filing your S-Corp tax return is March 15th, so coming up soon here, which no problem. Again, if this is something you're needing to do, reach out to us. We specialize in this. Otherwise, there's I think it's Form 7004. Don't quote me on that. But there's an extension form you can file for your S-Corp tax return that'll push it to September, as well as your April 15th taxes. You can file an extension there to push it to October if you need a little bit more breathing room. And with the S-Corp, typically we see opportunities to enhance retirement contributions. A 401k, for example, typically will allow you to put more into retirement as opposed to a SEP IRA, which 401k and SEP have the same contribution amounts, $70,000 max, But with a 401k as an S corp, because you're adopting payroll, you can contribute through payroll and match as an employer. Typically, you're able to contribute more than what you would have with the same income level as with a SEP IRA. So a lot to unpack there. We host whole seminars on like retirement deep dives, which maybe in the future we will. But again, reach out if you have questions or pop it in the chat. Distributions, of course, with the S Corp, you have to take payroll and classify money as distributions. So just be mindful of if you haven't yet run payroll for Q1, or if you still have to wrap up payroll forms for last year, that you'll need to report those distributions accordingly based on that payroll. So payroll first, and then the money access is yours. Expenses and more advanced stuff like balance sheet and stock basis. If you have an S Corp with stock basis, which a lot of folks do, not typically in real estate, but if you happen to have one, there are some last minute considerations there. Again, pretty nuanced, and I'll leave it to our tax team during one-on-ones if you like to book a meeting to get into that. So the best tax moves for S corporation agents, deductible business expenses. So just, you can, first off, you can expense the same amount as an S corp as you currently are now. The IRS guidelines for expenses are anything that's ordinary and necessary to your business. Those two words that's your North Star. That's kind of your guiding principle for what they want you and will allow you to expense. But in general, having a registered business in the state of Pennsylvania, that's state registered and federal registered. If you're making the S election, that's a federal tax election. Typically, we see a kind of bump up in the opportunities for deductions. So MLS subscriptions, continued education courses, training, different vehicle considerations, business licensing, professional services like ours were tax deductible. So there are a lot of considerations for additional business expenses. Some other real estate professional status reps, I guess is the acronym, things to consider is passive activity loss. So for example, if you have a rental property that generates you $50K in income, but you have $70K in expenses due to mortgage, interest, taxes, whatever, then your passive activity loss will allow you to kind of report that 20K difference from 50 to 70. Net investment tax income, just point there is, estates and trusts can have a more favorable tax percentage, but that is a whole separate conversation. Just know that it's a common topic, surprisingly common topic with our tax professionals this time of year. Cost segregation. Oh my gosh. If you have rental properties and you are planning to expand the business or sell off certain rentals, cost segregation is a fancy way of saying you front load depreciation. So instead of, if you have a rental property and you're depreciating, just say $10,000 per year over the course of the next 10 or whatever years, with the cost segregation, it's a whole study, it's a whole thing. But you essentially can take the depreciation schedule for a property and front load it. So instead of, $10,000 or $5,000 every year, you can take a much more significant amount in the short term. And that really comes in handy if you're earning a lot of income. Let's bump this up to, say, you're making $350K in net income. And then a cost segregation perhaps allows you to front load that depreciation and deduct $50K. And that's a $12,000 tax savings, because at $350, your marginal tax rate is now at the 24%. Let's bump this up, actually. That's good. That's why, the married filing joint federal tax chart is a lot more favorable than this filing single tax chart. That's why it helps you save tax to get married, because the stretches of income become a lot more favorable, a lot wider, let's say, than if you're filing single. But if you're making $450 and you cost segregate a property and front load that depreciation, say $50K, you're saving $16,000 because you'd be at the 32% marginal tax rate. So the big jump is from 24 to 32, and the max is 37 for federal taxes. I see something in the chat. Question. Yeah, let's.
Hi, my
Let's do a
audio
question.
off, so I just figured I would talk and then turn it back off.
Let's do it. Yeah, love it.
Okay,
What's up?
so my fiance and I were actually going back and forth between this because I'm a real estate agent. He has a few rental properties and LLCs. We
Hmm.
just purchased a home, so the townhouse I own is going to become a rental property.
Hmm.
For the sake of not affecting our debt to income ratio, because we still want to get more loans individually. That's why we haven't gotten married.
Hmm. Hmm.
That makes sense on taxes. Like I was trying to figure out what would actually save us more money.
Hmm. Yeah,
But yeah.
that's a great question, worthy of a one-on-one follow-up, but I will show you an example. I can't speak to the kind of debt to income
Sure.
ratio.
Yeah.
That's a deep dive, but I will show you an example. Like if your net income, say combined income is 200K as a
Okay.
single filer, your federal tax is 42,000 because at 200K you're tipping into the 32% marginal tax rate. 200 is between this number and this number. Whereas if you're married filing joint, making 200K combined income, you'll see it's 39K instead of 42.
Mhm.
So that right there is a $3,000-ish tax savings difference. If that difference in savings warrants filing jointly, then certainly we'd advocate for it. I mean, that's why the IRS incentivizes. Um,
Right.
it simplifies tax returns too if you file jointly. So they like it. But yeah, definitely more to explore there. I'm curious to, yeah, if you're open to scheduling a one-on-one, I think I put my link in the chat.
Yeah, I think I already said my contact info.
Oh, perfect. Cool. Love the question. And yeah, if anybody has real-time questions, I know we can certainly address those at the end, but feel free to go off mute and ask away. We got plenty of time. Um, Speaking of real estate, investment opportunities, 1031 exchange. I mean, speaking to a real estate audience, but everybody knows, 1031 exchange is just a tax deferral. So, you can invest in a property and then reinvest the proceeds into another property. So you just avoid the capital gains by transferring into another property. And then bonus depreciation is, additional first year appreciation or depreciation rather, for, new time or first time investors in a property or an asset. So all these sorts of things are just examples of what you might want to consider, or at least have a conversation or knowledge base around for future opportunities. But of course, that last minute tax filing, if these things resonate with you, feel free to reach out to us or reach out to a CPA and just ask them their opinion. Yeah, thank you, Callie. So as far as 2025 and onward, this is what we recommend as far as best practices, because there is no perfect system out there, unless you're in corporate America and have these super expensive, corporate systems, PEO systems doing all the back office work for the W-2 employees. But even then, like, those who have been W-2 in the past, you remember putting in your W-2 into TurboTax, and you're like, oh, okay, I owe $1,000, or wow, I'm getting refunded 5,000. Like, okay, yeah, I'll go with it. But there's no perfect system out there, and certainly if you're self-employed, there's no playbook. Unfortunately, there's no IRS playbook to do X, Y, and Z to achieve financial peace of mind and confidence around taxes. But we've seen this formula work well time and time again, where just first step is if you're new to self-employment, you're classified as a sole proprietor. That means you're filing a Schedule C. That means you're fully subject to self-employment tax. Unfortunately, you're in the, anecdotally speaking, highest audited cohort of workers in the US. And that's, pre-COVID data. And the IRS they're not like sending out reports and data reports every quarter or anything. So take that with a grain of salt, but anecdotally speaking, Schedule C filers who are self-employed, incurring their own expenses and don't have that corporate visibility through back office management systems, tend to expense things on a kind of trust me bro basis, which is why the IRS tends to, audit those who make over 200K filing Schedule C more so than those who are W-2 making 200K. Again, pre-COVID data speaking there. But having an incorporated business and a streamlined digital bookkeeping system to keep track of records is the key to so much visibility, clarity. There's some really affordable programs out there. Everybody knows QuickBooks, but Hurdler, spelled Hurdlr, Xero, spelled with an X. Pretty affordable digital accounting systems. We partner with both of them and have our own bookkeeping as well. But just having a separate LLC, an LLC gives you legal protection and financial separation. You open a separate business bank account. All of your commissions, all of your expenses flow in and out of that. No commingling, like your personal banking and everything is separate. It lives over here. Having that digital accounting, so everything's reconciled, you can see at any point in time how much money you're actually making as far as your take-home profits, and then how that translates to how much tax you owe. Ideally, like this is just a calculator I put together. Really, my wife put it together. She's a smarty who worked at Boeing. But just having a calculation or an understanding of what your taxes are going to be based on smart digital bookkeeping is super key to preventing surprises, overpaying tax, and just really having opportunities to treat taxes like the expense, like we talked about at the top of the call. So with that LLC, we'll explain S Corp in a second, but the S Corp tax election is a great way to just stop the bleeding of self-employment taxes. You pay a flat 15.3% self-employment tax. The S Corp prevents that. As an option, we'd recommend S Corp if you're making over 50K net or so, but there's no like line in the sand. It's just kind of a consistency of income matter. And then setting financial goals. I've have been coached by many a CPA at our firm, at our company, and I've read a lot of books on this, on where I'd want to be as far as financial goals and having that financial freedom number. So it's always good to think broad and then reverse engineer. I find I want to have $1 billion. No, I don't. I want to have $5 million by the time I retire. I want to retire at the age of 45 too, for example. So if that were my goal, have $5 million by the age of 45, then I would just reverse engineer the steps to get there and just start taking micro steps, baby steps through, bumping up my retirement contributions, whatever cash flow I have to invest in the market, invest in real estate being the most tax advantaged, asset out there in a lot of cases. Just kind of taking steps towards that larger goal is a really good, healthy way to make good use of a CPA or a tax professional team. And that's our approach too. Like obviously S Corp, everything we do is managing the short term, making sure in 2025 there are no hiccups, everything's clear, but also just looking forward into the future. Like where do our customers want to be in the next 10, 20, 30 years? How can we assist those goals to retire before the age of 65 if that is the goal? And what are the micro steps we can take to get there? But it all starts with knowing your numbers. Like if it's March, if on the Zoom right now you don't know your net profitability and how your net profitability then will translate to the taxes you owe, then this is kind of what we'd suggest is just separate everything, get incorporated, digitize your back office. It's fairly affordable to do so. And then, of course, specialization is key. We have CPAs and we have EAs, enrolled agents, on our tax team. CPAs are awesome, but CPAs are local, state-based public accountants and aren't necessarily specialized in federal tax matters like S Corp or even real estate tax matters, but they're phenomenal with everything like numbers and filing taxes. But we hear this all the time where, oh, my CPA just fell short of expectations, communication wasn't quite there, I don't think they know real estate. There are tons of CPAs out there that know real estate, they're very specialized, and I've heard the analogy that a CPA is like a general practitioner. They're great for just diagnosing things, or just if there's a general goal for filing taxes quickly and getting things numbers translated, that's what they do. But if it's something more specific, then they'll refer you out to a specialist, someone like formations for real estate S Corp stuff, or 1-800 accountant for whatever C Corp stuff. I don't know. But yeah, just having that teamwork, that'll make the dream work. So yeah, S Corp, we keep teasing S Corp. Yeah, S Corp again is is in our opinion, we're a little biased, but in our opinion, it's the best, most immediate tax savings move you can make if you have an LLC and make over 50K net income. The idea behind it, again, is you pay an unfair amount of this tax called self-employment tax. And as opposed to the federal tax chart we saw before where percentages went up from 10 to 37, the self-employment tax is flat 15.3%. And despite its name being self-employed tax, it's not a tax that's imposed on you for being self-employed. It's not like the government's mad at you for being self-employed. It's just, it refers to the fact that you pay the full amount of FICA, F-I-C-A, yourself. FICA being the Social Security and Medicare taxes we all pay. But we in the W-2 world only have to pay half of this. We only pay 7.65% because our employer is required to cover the other half. So that objectively is not fair. If I were making the same money, but if I were 1099, I'd be on the hook for an additional basically 7.5% tax just by sheer virtue of not having an employer to split this tax with. Enter S Corp. So S Corp, despite its name, is not a separate corporation. It should just be called the S election. The S election is a tax election you can make for an existing business, so you have to have an LLC first. And the idea is to correct this, to make it so that you're not paying the full self-employment tax on your total net income, which if you're making $250K, that's about a $28,000 tax bill on top of your federal tax and on top of your state tax. Instead, you pay a fair amount. In other words, what you would pay out of pocket if you just happen to be W-2, which would be half or less. So with the same net income, essentially what the IRS requires you to do with an S Corp is treat yourself like an employee of yourself. Unfortunately, it would be too easy if the IRS allowed us to pay half of this tax, the 7.65, and call it good. But that's not how the system works. So you still have to pay the same percentage, 15.3. But what the IRS allows you to do is if you're an S Corp filer, you pay yourself a reasonable salary to then the result of which will allow you to pay out of pocket the same amount that you would have if you were just W-2. So the difference is about 13K in tax savings. Again, the self-employment, aka FICA tax with an S Corp only applies to a reasonable salary that you pay yourself, as opposed to the full 250K in this example. So yeah, I guess a lot more to unpack as far as S Corp, retirement, expense management, but hopefully this provided a good broad overview, just some things to think about. And of course, reach out with any questions if you want to scan that QR code or use the link in the chat. But we'd love to open it up for any questions if there's anything top of mind.
Yeah, you can put them in the chat or you can unmute yourself and just ask.
And while we wait, I can give some common examples. One of the most common questions we get asked are like, how hard is it to incorporate? Like, what are the steps to form that LLC? And it's fairly easy. You can go onto the Secretary of State website in Pennsylvania and fill out a simple form to get an LLC. My advice is e-file it. The Secretary of State can take a long time, and certain states, I've seen it take up to 50 days for them to approve and get the LLC documents in your hands for you to then create a bank account and get things moving on the separation side. But in general, it takes 3 to 5 business days, sometimes less than that if you e-file, if you use us or LegalZoom or InkFile. It streamlines it, and it's worth the additional like $20-50. Question, filing for S Corp by March 15th this year. Does it apply to 2024 taxes or 2025 tax year? So that will apply, that refers to 2024 taxes. If you're an S Corporation last year, then you have to file that 1120S S Corp tax return by March 15th this year for last year's taxes. So the same way you file your personal taxes by April 15th for 2024, same deal with S Corp, it's just due a month earlier. Great question.
All right, well, I don't see any other questions. So you did put the code, the QR code, in case people want to just ask you privately.
Mhm.
And again, Isaac and Ryan, I see you're still on, Ryan. Isaac and Ryan. Isaac, thank you for presenting today. We truly appreciate your time. Ryan, thank you for being an affiliate member of BCAR. And thanks to all of you for joining us today. And you should receive the recording, I would say, either later today or in the next couple of days. But again, appreciate your time for everyone. Thank you.
Yeah, pleasure to be here. Thank you all. Yeah, thanks everybody
Thanks.
for having us. Yep,
Thanks. Bye-bye. Have a great day.
you as well.
Thanks.